The Bitcoin halving is happening. The election cycle where they give out free candy to the kids, stimulus. And we generally get, well, we've got the central bank who want to cut rates, even though inflation's not playing that game. We'll talk a bit about that in a sec. And then we've got global stimulus cycle from the weekly global liquidity index.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. According to Raoul Pal, we're currently in a phase similar to that of a financial analyst, where the Bitcoin halving is taking place alongside the election cycle. It's like a time when free candy is given out to kids and stimulus packages are being distributed. Overall, things are looking positive. We have the central bank pushing for a rate cut, despite inflation not cooperating. Let's discuss that in a moment. Additionally, there is a global stimulus cycle indicated by the weekly global liquidity index, which has been steadily increasing. This is an important aspect to consider when liquidity starts to increase significantly. It is likely that the Europeans will begin to make cuts. We have already witnessed Raoul Pal's perspective on the Swiss Cup. Let's discuss the upcoming Nations Cup in Latin America, with a particular focus on Brazil repeating pattern. There is an indication that the global cutting cycle will gain momentum. China's economy is currently underperforming and burdened with a significant amount of debt, caught in a deflationary spiral fueled by a rapidly aging population and an overwhelming burden of debt. We are all familiar with those things because we have a good understanding of them. Whether we reside in Europe, the US, or Japan, our place of residence doesn't matter. It appears that there are plans to implement further stimulus measures, as the Japanese authorities are giving the impression of considering interest rate hikes, despite the fact that they are still maintaining their current policies. When examining it from a realistic perspective, negative interest rate policies may have some drawbacks, and it is possible that we may witness inflation continuing its gradual decline. It's been stagnant for a while now, but some of you have noticed a pattern in the inflation cycles. You have seen a chart comparing previous cycles to the current one, and it consistently shows a period of stagnation followed by a decline. And lots of things Raoul Pal discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
Okay, macro summer, crypto summer. We're at the phase where the Bitcoin halving is happening, the election cycle where they give out free candy to the kids, stimulus. And we generally get, well, we've got the central bank who want to cut rates, even though inflation's not playing that game. We'll talk a bit about that in a sec. And then we've got global stimulus cycle from the weekly global liquidity index, which has been rising. So this is the part where liquidity starts going up significantly. The Europeans are going to start cutting. We've already seen, I think, the Swiss cut. We're going to see a few nations cut. Latin America was first to hike, started cutting. Brazil. So we'll see the cutting cycle, global cutting cycle will pick up. We've got China with a very lackluster economy. In fact, it's a debt deflationary trap driven by an aging population and excess debt. We all know about those things because we're all living in one, whether you're living in Europe or living in the US or Japan. So they're going to stimulate more. The Japanese are pretending to raise rates, but they've still running kind of negative interest rate policies when you look at it in real terms. And we should see inflation continuing to slowly decline. Now, it's been flatlining for a while, but many of you see me tweet out a chart of previous inflation cycles versus this one. It always has this flat bit, then it hooks down. If I look at the Trueflation index, the guys at Trueflation have this real-time inflation index with millions of prices. That thing is now at 1.78%. It's falling. I know nobody believes me. Either way, the Federal Reserve want to cut rates. Why? Because of the Everything Code. I've told you about the Everything Code. If you've not seen it before, please watch the YouTube videos on the Everything Code. The Everything Code basically suggests that they have to use liquidity to monetize the interest payments on the debt. We're coming into the teeth of the interest payments now, and we're paying for the interest for the debt we issued during the pandemic. So we got a lot of payments to do. The bond market's freaking out from this, obviously, because they're like, how can we pay for all of this stuff at 5.5% rates without issuing more and more and more debt? Gold market's breaking out on the back of this, and so it should be, because the answer is going to be they're going to have to use liquidity. Will they use quantitative easing? Probably not. Why? Because we all know the trick, and we know the name quantitative easing equals money printer goes burr. So what will they do? Well, they've been running down the reverse repo. That's okay. It doesn't matter what the format is, but they've been running down that, which means banks have been putting money into the market. Then they have been they're still doing quantitative tightening, but they're already talking about, well, at some point we need to stop that. Of course they do, because the reverse repo is almost empty. That runs the Fed out of opportunities at this point. Next part is, what do the Treasury do? Because the Fed is basically just helping the Treasury now. Well, the Treasury's been building up the Treasury General account. That's their bank account. And then what they will do is start running that down over the election, which is liquidity flushing into the system. We've got to get through, I think Mike Howell talks about this. We've got tax season, and often that takes money out of the money markets, and then it goes into the Treasury General account, then it gets drawn down. Some people think that's liquidity negative. I'm not entirely sure.
Based on stablecoin data, it appears that traders are anticipating a potential new all-time high for the price of Bitcoin. According to a report from Ccoin Research, there has been a significant increase in the inflows of stable coins. This surge is attributed to the upcoming Bitcoin supply event, which is set to take place in 7 days. The report highlights the continuous growth in Tether and USD coin issuance, indicating a growing interest in crypto assets among European and American investors. On the other hand, Binance USD, True USD, and PayPal USD experienced declines in issuance. Despite this, the two largest stable coins in terms of market capitalization have maintained a steady flow into the market. According to a user on the X social network, there was a significant increase in the issuance of USDT and USDC in March. The issuance of USDT increased by 5,825 billion, while the issuance of USDC increased by 3,803 billion. This shows a notable increase compared to the previous month. The Moon Bitcoin's current upward trend is on a rapid rise and could potentially reach $100,000 by the end of next week. However, some may view the projection of reaching the moon as overly ambitious. Experts have stated that the analysis from market data tracking firm Santiment supports the belief that Bitcoin could reach $100,000. This prediction is based on the decreasing correlation between cryptocurrency and US stocks. Brian Quinlan, the marketing director, noted the divergence of Bitcoin from the S&P 500 as a distorted bullish signal for BTC. Quinlan pointed out that the longest poll runs in the past 15 years have frequently happened when there is minimal correlation between Bitcoin's price and the S&P 500. It's not necessary for things to be completely opposite, but if they are moving in their own unique ways, it's a positive indication that we can continue progressing and reach those levels of $80,000, $90,000, and $100,000 that many optimistic individuals often talk about. Price analysis based on metrics suggests that if Bitcoin's growth pattern after the fourth halving follows the same trajectory as previous cycles, BTC could potentially reach anywhere between $140,000 and $4.5 million per coin. That's quite a wide range, but the important thing to note is that the lower limit is in the six-figure range. The market eagerly anticipates Bitcoin's price surpassing $100,000 and beyond. Let's back to the Raoul Pal interview.
I think, but in the end, the Treasury General account will be like $1 trillion, and they'll inject that $1 trillion nicely back into our hands and number go up. And then all the nations around the world will be doing something similar. Then we've got probably Basel IV, which is next year. Basel IV is even tighter standards that means that the banks have to use more regulatory capital, which means they need to own more bonds. Clever that, right? Find a way for the banks to own all the bonds so you can keep issuing them. Okay, they're all doing that. So that's about to happen, rolls out in, I think it's the UK first or Europe first in like January. And then, I think the UK is following the US, which is July, and I think Europe's in January. So we've got that whole liquidity event to come. Then we've got, oh no, the commercial real estate market. The banks are stuck with this. What do we do? Oh my God. Let's absorb it onto our balance sheet. So we've got that game to play as well. Plenty of games to be played for liquidity. It's just at the right time. You don't want to upset the voters. You want the markets to go up. And that is a very powerful backdrop. This macro crypto summer is the powerful backdrop for assets because you're debasing currency. See my tweet from yesterday. I think it's already at 5,000 tweets, likes or something. As people understand that currency is being debased, assets go up. The assets that have network effects, technology and crypto, go up the most. That's macro summer and the debasement cycle. However, what's interesting about macro summer is those of you who don't invest in crypto or don't like technology, you get to have your chance to, because it's the commodity cycle. So commodities do well, macro summer and macro fall. So you've got a nice commodity boom to come. Usually value stocks finally do something. The smaller companies tend to do something over this period. Everybody, it's a game for everybody to play. That's why it's summer. The living's easy. You can make money in pretty much anything you own. Even banks go up over summer. So it's a good period for everybody. And so whatever your strategy, you'll probably do well. Emerging markets, less so because of the dollar. The dollar has been strong in this cycle. And so because of the rates market. So I'm not sure emerging markets will do that well. But commodities, overall, value, cyclical, that kind of stuff should do well.
While Bitcoin may not be suitable for everyone, it undeniably possesses the potential to generate significant returns. From 2011 to 2021, Bitcoin emerged as the top-performing asset globally, surpassing all others by a wide margin. Bitcoin has provided impressive annualized returns of 230% per year. The next closest asset class, high-growth tech stocks, only delivered a 20% return. This helps to explain the remarkable rise of Bitcoin, which went from being worth $1 in 2011 to a staggering $70,000 today. It's important to note that past performance does not guarantee future results. According to experts in the financial industry, there is a widespread belief on Wall Street that Bitcoin has significant potential for further growth. Future price forecasts vary widely, with estimates ranging from $100,000 to over $3.88 million. Cathie Wood of RK Invest has provided her insights on the matter. It is highly probable that Bitcoin will reach a price of $1 million before the year 2030, given the significant influx of money into this emerging market. Investing in Bitcoin can be a risky strategy with the potential for high returns. However, it's important to note that Bitcoin remains a highly volatile asset. Your retirement savings could disappear overnight or face regulatory challenges from the SEC. Despite these risks, the introduction of spot Bitcoin exchange traded funds, ETFs, may encourage more people to consider using Bitcoin as a retirement savings option. It seems that Fidelity Investments has taken the initiative to offer retirement accounts for Bitcoin. This suggests that Bitcoin may soon be included as an option in numerous retirement plans. These investment options typically limit the amount you can allocate to Bitcoin, but they can still be used to enhance your retirement savings. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.